For our FinTech Spotlight segment this month, we are featuring Qplum, a company that is bringing AI, data-driven strategies, and affordability to the world of investing. I've invited the co-founder and CEO of Qplum, Mansi Singhal, to tell us more about the company today. We're also going to discuss why monitoring our investment portfolio might actually be a really bad idea. Welcome to the show, Mansi.
Thanks for having me, Andy.
So, Mansi, for the last 5 years, I just want to let you know, I've been not really looking at my retirement portfolio all that much because everything's just been going so well. It's been soaring. But lately, the markets have been kind of not that great, and I've been checking it a lot more frequently. Why is that not a good idea for me?
That's definitely not a good idea. And this is not just me telling you this. This is also research that has been written by many economists. In fact, Richard Thaler, the 2017 Nobel Prize winner in economics, he actually suggests that one should be lazy. And this is very serious advice because it's natural. All of us are guilty of watching the news, seeing so much about this stock going down, things happening in the stock market, and then we are like, oh, information is on your smartphone, it's instant, it's free. It's hard to weed it out, and it's a really bad idea because if you monitor it too much, you are prone to stress, and stress means you make knee-jerk reactions, which can result in poor returns for you in the long term. And it also means high trading costs for you, which might go unnoticed and you might lose on your long-term capital gains.
Yeah. So the alternative then is what I've read from some of the articles you guys have put together is to become a lazy investor. And that sounds funny to say, but that sounds like it's a good thing. Why is being a lazy investor a good thing?
Being lazy is good. The reason it's good, it's because you're trying to be an investor and not a trader. And it's very important to make that distinction. Traders think short term. They are concerned about the here, about the now. They would monitor their markets. They would act on their portfolios multiple times in a day. That's not the business, you and I are in, or maybe at least, not the others are. Maybe I am in that business, but not everybody else is in. Investing is not supposed to be this stressful. Investing is different from trading. Typically, we recommend investors to still monitor their portfolio once a year, maybe. Of course, if there's a life event change or if there's any big change, then they should revisit it. But there's really no reason to go back and check it multiple times just because now you have a smartphone app on your phone, and you can. It's not a social media account. Right. It's your investing account.
So you got the apps, right? And you got all these new technologies that show you the information right away. I'm in a work environment at my office, so whenever I go into the front lobby, they've got two of these big screens playing 24-hour news all the time. I can't keep my eyes away from it sometimes. How can we weed out all the noise that we're hearing about, buy, sell, whatever, just everything? How do we weed it out?
Yeah, and see, the thing is that it's not the investor's fault because you are being flooded with all this information, right? The media is flooding you. The brokers really want you to do more trading so that they can get their trading commissions. And the easiest thing to do is just change the channel, just turn the show off. Like anyone else, I am also guilty on acting on a bit of the news that I saw, and then I'm like, oh, maybe we should put this trade on, and then you feel bad, oh, maybe I shouldn't have. And really the only way to tackle that is if you have a plan before you need one. And by that, what I mean is, if you have a plan to deal with drawdowns, if you or your advisor have discussed, what would you do or what would your portfolio do if things go sour, if things go down 5%, 10%, if you've had this discussion with your family or your advisor beforehand and you have set a plan in place, disciplined investing creates wealth, typically. Irrespective of market conditions, you need a plan. And that's kind of the only way to, mute all that noise.
Well, let's talk to the average investor out there or somebody who maybe hasn't even gotten into investing. Maybe they're doing a little bit in their 401k or something like that at the office, but they're ready to amp things up a little bit. So talk to us about how Qplum is helping out the average investor with this issue.
So, QPlum is a registered investment advisory firm, and we typically help individuals and families with all kinds of issues. You know, our youngest client is a 19-year-old. He's going to undergrad, and he saves during his internships. And I'm really like so impressed by him because what he is doing is he's saying, "Oh, I don't want my parents to take any loans for me, and they took such a big student loan for me, and I really want to be independent very early in life." I was flattered when I heard that. And our oldest client is, above 70, taking his distributions from his IRA. So we do help, a very wide range of clients, and what we're really helping you with making these decisions along with you on depending on what phase of life you're in. You're maybe a young parent, and all you're thinking about is your child and not looking at your retirement account. Maybe you are a tech executive or in financial industry, and you're getting these big bonuses, but you're not being very smart about investing them and being very conservative because now you're more concerned about losing wealth rather than returns. So we take the time, like the first step always is to get on a call with one of our advisors, and we take the time to understand what's important for you and then lead you in the right direction, for that 5-year, 10-year plan.
Excellent. Well, I understand you guys employ a little bit of technology into how you do this process. So how do you guys differentiate yourself from the other investor down the street that I could go and just walk into his office and help me with my money? How does it different?
Yeah, I mean, it is a little bit interlinked with Gaurav and my background. So both Gaurav and I are computer science engineers by education, and when I came to US as a student, really I learned a lot. Um, and one thing that I learned, which kind of, and as I said, I was in computer science. I never really thought about finance as the industry that I would go in. And what we really learned is that the systematic way of doing things is not something that has been made accessible to an everyday investor. Everyday investor has either been given a lot of choices, which are very hard to parse, even for a Wall Street bank. If I give you thousands of products to choose from, it's too much research for you to do. They are sold a lot of products, not strategies, and everybody's out there just trying for them to either trade too much or charge in hidden fees. So it's supposed to be much more simple, and you only have to make a few right decisions to be able to invest for the long term. So that's really the goal of QPlum. Whatever we have learned in the last 15 years in financial services, I've traded at banks, traded at hedge funds. I'm trying to take that, put that in QPlum, package it there, and then offer it to investors like you and myself.
Awesome. So how does that work for the everyday investor then? So I have this call with you guys where you learn a little bit about my goals, and then how does the AI sort of take in or help out the situation?
So AI works very much behind the scenes. AI is like that toolkit that we have through which we are able to offer all this at a very affordable cost. So, and we get this question a lot: why do you guys use AI, or what's the point? And really, where we're using it is as a way to reduce costs. And I'll give you a very simple example. Active management is typically associated with high costs because the moment I utter the word active, people are, oh, you're going to trade a lot, you're going to churn my account, it's going to charge me a lot of money. We've built an automated system that end-to-end is completely systematic, and yet we are able to charge our clients just a flat fee. And the reason we are able to do that is through use of AI. If I were to build the same system using manual processes, then obviously, I'd need a much bigger task force. So that's one of the ways we use AI. The another way we use is dynamic allocation. So by that I mean markets are changing. There's so much data. I mean, you need supercomputers and full-time quants to be analyzing this for you. Obviously, not everybody can hire those people or those systems. And so that's where we come in, where we are again able to create this pipeline, bring down the cost for everybody, and then offer it through an online platform.
Excellent.
So
I'm sorry.
Your allocation is changing. The allocation is changing over time, and you're not stuck in a static allocation, no matter markets are going up or down.
Okay, excellent. So You guys, you mentioned the affordability side of things. So what should somebody expect to pay? You know, they go through the process where they talk with a financial person. They develop the plan. AI sinks in to help kind of make the process easier. So you're almost getting active management with affordable prices. So what kind of prices should people expect?
Yeah, so to get on a call with an advisor, I mean, you don't have to pay anything. The first consultation is free, and you can just walk away with that plan and go to another advisor and execute it, or do it yourself if you feel comfortable doing it. For clients who invest assets with us, we charge a flat fee of 50 basis points. So for every $10,000, it means $50 a year, or just roughly speaking, like $4.17 a month.
Okay.
And we charge it for the month that we serviced, not in future. And you don't pay any trading costs. You don't pay anything to the broker. We take care of all those charges because we have been able to negotiate all that with the broker. And that's all you pay, just the 50 basis points.
So how does that compare in the industry? So that's half a percent or 50 basis points. How does that compare in the industry?
I would say we are very competitive given the amount of active management and oversight that is involved in the process. I mean, you always have zero fee index funds, and you always have legacy robo-advisors who are offering like zero fee or very low fee, but then you also have to look at the quality of service that comes with it. So for the quality of service that comes with it, which is unlimited consultations with advisors, human advisors, a lot of oversight, risk management for handling downturns, all that included, I think we are very competitive compared to any high-end asset management firms that typically start at 1%.
Wow. Do you see this as, I mean, obviously you're heavily invested in this. You're the CEO of the company, but do you see this as a trend in the future where people are moving away from the high cost active partners and moving more towards lower cost, effective, technology driven solutions like QPlum?
We definitely see a lot more interest in the younger generation. We also see a lot of interest in high net worth individuals who are probably just sick and tired of paying so much in fees and not seeing much of a result. I do want to just make a distinction, and it's probably a little nuanced, is we get thrown into this debate of passive versus active a lot. Because people normally associate passive with low fees and less maintenance, and active with high fees and a lot more monitoring and a lot more knee-jerk reactions or watching their portfolios. And that's kind of the mindset that we are trying to change, that we all need a little bit of moderate amount of active management, because life events happen. You buy your first house, you do need to liquidate something.
Right.
Oh, you had a child, you will probably need to liquidate something. So you are already in some sort of moderate, very moderate, active management in your portfolio. We just have to do it at kind of balance it. However, that's somewhat of an educational challenge that we're facing with investors, because they, as I said, they normally associate, oh, passive means low fee. I don't have to do anything. I can just set it and forget it. And the truth is, you never set it and forget it. So you do need some moderate active management, but you shouldn't have to pay an arm and a leg for it.
That's a good conversation that you're starting. That's very cool. So when was the company founded?
So we were founded in late 2014, and our product was launched in February of 2016.
Excellent. So what's the adoption been so far? I mean, you mentioned a couple of your clients that you have in wide ranges of ages, but how's the adoption been?
It's actually very interesting that we have, in fact, in our early days, we attracted a lot of professionals in financial services for some reason, because they thought, oh, you guys look really smart. You guys have cracked the code of doing active trading at a very low cost. So I really like you guys. But now, of course, as the firm has matured, we have clients from probably every kind of field. We manage roughly about 81 million in assets, and we service more than 500 families. We also believe in this huge amount of oversight and human communication. So technology is great, but technology is written by humans and it affects humans. So you definitely need that channel of communication to be open. So we highly encourage our clients to be engaged with us as their schedule permits. A lot of them are very busy professionals, so we understand. Um, but yeah, we seem to be growing pretty fast, and we have also launched our institutional side of the business earlier this year, where we are now sub-advising other investment advisors and other asset managers, so they can take our strategies and share it with their clients.
That's incredible. I love what you're doing. I love the I love where you are within the process too. You're with 500 families. You're growing. You're taking a new look at the active versus passive conversation while still keeping things affordable. I'm thinking maybe there's somebody listening right now saying, "Well, you know what? A newer company, QPlum. I know Vanguard. I know Fidelity. I know TD Ameritrade. They've got these commercials. They're telling me the ones that I need to be with. Why should I invest my money with QPlum?"
And that's an excellent question. And really, for any investor, you have a lot of choices these days. I don't need to start naming them. You have more than like 100 choices if you start going around and shopping around. I think the key to pick any advisor, and I'm not going to sell QPlum here, but key to selecting any advisor is really what's going to be your process with them. If you are comfortable picking a big player who's just going to give you an 800 number and they're more of a broker and not going to take any decisions with you, and you're very comfortable investing, then go for it. But then I see a lot of lawyers, doctors, successful business owners who are genuinely lost because this is just not their area of expertise, right? We all are good at some things. It's just not the same thing every time. So if you need more hands-on help, and if you feel like you need somebody, you're just starting your journey and you need somebody to kind of walk you through that, then we might be the right partner for you. Or if you're already a high net worth individual or family and you've accumulated a lot of assets, but you feel like you're paying too much in fees, then we might be the right partner for you.
Excellent. Well, obviously, a great place to start is with that free financial assessment you mentioned. Where is the best place for people to check that out and give that a go?
Yeah, if you just go to www.qplum, Q-P-L-U-M, plum like the fruit, qplum.co, you can schedule a call with an advisor, or you can take the assessment yourself and take it from there.
Excellent. Mansi, thank you so much for taking some time to speak to us about this important topic. Obviously, we're talking about our future here and doing the right thing. There's lots of noise out there, but if you get a good partner to work with, it can help cut down the noise and head you in the right direction. So thanks so much, Mansi.
Thanks for having me, Andy.